Hey guys, and welcome to the Working Money channel. Please subscribe, guys. It really does help with the YouTube algorithm, and a thumbs up never hurts as well. Charles Gasparino here on Twitter, the greatest NY post graphics department. XRP, Ripple, Ethereum, Bitcoin. He's hashtagging and tagging everyone in this. So this is the most recent article that came out from Charles Gasparino. Of course, he is new to the XRP community, a journalist. He has made a couple of appearances on Fox Business News talking about the Ripple SEC case. But, I just wanted to bring this to you guys. This is from Post Business. Bitten by the SEC, the duo behind looming crypto over-regulation disaster. Gary Gensler here, Jay Clayton. In 2018, Future Security and Exchange Commission boss Gary Gensler sat down to discuss cryptocurrencies with then SEC Chair Jay Clayton. Their fears of misuse and the then largely unregulated industry ironically set the stage for the agency's current overactions towards over-regulation. Charles Gasparino, the man in our court, really kind of fighting to get this story out, to the mainstream. I don't even know if any other mainstream media outlets have been reporting on this. It seems as though Charles Gasparino is the only one who has been reporting on this particular story. But a great graphic here with these guys just sitting down, chatting, pile of Bitcoin in between them. And you know what Gasparino's all about. He's learning from us guys, and he's getting it out to the public. I'm going to keep going. BondCrypt XRP here. So this is the latest news, and this just happened a couple of days ago. I did not report on this, but I think that this is important to note. The Commodities Futures Trading Commission, or the CFTC, has for the first time classified tokenized dollars. So stablecoins, guys, they are now classified as commodities, according to the CFTC at least. So the Commodities Futures Trading Commission has for the first time classified tokenized dollars or stablecoins as a commodity by entering into a settlement with Tether. So we know Tether was in the hot seat. There was a lawsuit revolving around them. And because of this lawsuit, now the CFTC has made the decision that we are going to consider stablecoins commodities. CFTC issued an order simultaneously filing and settling charges against Tether for making untrue or misleading statements and omissions of material fact in connection with the US dollar Tether token. The order requires Tether to pay a civil monetary penalty, and that was $41 million. Some details on the case here. They claim that all their USDT tokens were 100% backed with USD, which they were not. This is the first time the CFTC has applied the CEA's broad definition of commodity to a stablecoin. CFTC Commissioner Don D. Stump said, adding the definition of a commodity is relied upon in applying the anti-fraud provisions of CEA's Section 6C. And so the CFTC thus is claiming jurisdiction over stablecoins by it being the first regulator to take official actions regarding these said stablecoins. This goes on to say the SEC, however, has stated that lending or borrowing such stablecoins is a security, with some stating they may come under the jurisdiction of the OCC instead and should be regulated as a bank. This is a view that Treasury Secretary Janet Yellen holds. This confusion has led to the industry proposing a single crypto federal regulator to remove any uncertainty due to different regulators claiming the same jurisdiction over the same asset. So even in and amongst regulators, they are still trying to kind of figure out who's got control over what. But the CFTC now has come out and said, okay, we are classifying this as a commodity. Called it. It's ours. I don't really know how that works, but, it sounds kind of funny. I guess if they are, they're the first ones to do it, I guess there's some precedent setting. If that, I don't know, is that precedent setting? Maybe somebody else knows better than me. Put it down in the comments if you do. But it sounds to me like this is how it's all going down. We have jurisdiction over this now because now there's a case where we have now claimed this a commodity, and therefore the judge agrees on that. So now we will be enforcing all stable coins here on forward as such. U.S. Congressman Tom Emmer is also part of this story, guys. This is from XRP Crypto Wolf here, posting this from AMB Crypto. U.S. Congressman says majority of tokens are a currency or a commodity. So this is Tom Emmer's stance. He outlined his approach in the Congressional Blockchain Caucus in an interview. It was essentially a group of Republicans and Democrats that aimed to formulate policies around crypto, NFTs, DeFi, all that fun stuff. Last month, SEC Chair Gary Gensler stated that the regulator needs more power to regulate the crypto market, something that Emmer expresses his disapproval on, which we know. This time around, the SEC Chair stated that a crypto ban is up to Congress. In response to the same, Emmer argued that Gensler believes that almost all tokens are securities, adding that he adamantly disagrees. I think the community would disagree. Most of us would say the vast majority of tokens out there are either a currency or a commodity. He explained that what Gensler is doing is intentional and not ignorant. So he is even saying, Tom Emmer is even suggesting that the SEC is underhandedly trying to classify crypto as one thing to benefit them in an attempt to grow the regulatory jurisdiction over the industry. So this is, like some people have suggested, this is turning out to be a turf war, or rather is a turf war in disguise as maybe something else. This is why Gensler is throwing this this label security on everything. But Tom Emmer, he's standing up, he's saying he does not agree. It doesn't matter whether it's a stock token, a stable value token backed by securities, they must work within our securities regime. In an interview, Emmer raised objections to Gensler's use of the word stable value coins. For stable coins, he argued that Gensler attempted to make them synonymous with stable value funds, which are under the jurisdiction of the SEC already. Emmer also stated this: I think it's a challenge to the central currency. I don't think we should be emulating the Communist Party of China. So there's also this issue of the US central bank digital currency, which could, I suppose, be classified as a stable coin, which could be a little precarious, right? We have to get these definitions right, because would a CBDC be a stable coin, or would a CBDC be just a digitized version of the dollar, a cryptocurrency version of the US greenback? I think we know what the answer is, but, within the legal definitions, I think that they realize that this could be a problem, and so they have to get it right. Commenting further on regulations, Emmer said that Gensler and the SEC are creating regulation that doesn't exist. Meanwhile, he said that several bills are in queue, but are stuck with the Financial Services Committee. So Emmer standing up there in Congress, giving his opinion on this. Of course, Gary Gensler still trying to fight tooth and nail to get jurisdiction over most cryptocurrencies. We're still in this fight. Of course, there is the legal battle between Ripple and the SEC. But here's this, guys, and we know Ripple does have ties with Brazil and the Central Bank of Brazil. Back in 2019, Brad Garlinghouse made a trip over there to Brazil to talk to the central bankers in that country. Well, this from Michael at Val5 Link. Central Bank of Brazil reports Brazilians have bought more than $4 billion in cryptocurrency this year. This could also speak to this idea that Brazil looking further into cryptocurrency integration into their system, and could speak volumes to why Brad Garlinghouse was in Brazil back in 2019. The Central Bank of Brazil released a report that shows Brazilians have purchased more than $4 billion in cryptocurrency imports since the start of the year. So this is just 2021, and 2021 is not finished yet. The report, which shows cryptocurrencies as part of the commercial balance of goods, shows these imports have been holding over the $350 million number since January. The peak of the cryptocurrency buying spree occurred in May, when crypto purchases reached $756 million during that month alone. Since then, purchase numbers have decreased, reaching close to about 500 million in late August. The numbers for September are not available yet, so it is impossible to determine if the decreasing trend is still happening. Brazilians, though, have been enticed by cryptocurrencies, and according to Bruno Serra, the Director of Monetary Policy at the Central Bank, this interest is unlikely to fade in the future. So Brazilians are being encouraged, it sounds like, to purchase cryptocurrencies. And just to give you guys a little bit of context with the Ripple and Brazil connection here, I thought I'd bring this up. Ripple and Central Bank of Brazil hold a private meeting, and I'm sorry, it was not 2019, it was actually last year, June of 2020. So I'll link this article in the description if you guys care to read. But I find that interesting, right? Brazil adopting cryptocurrency, obviously in the back end, that their central bank is having meetings with Ripple, but also at the front end with their retail customer, with the people of Brazil, not banning cryptocurrencies, realizing this is an opportunity for people to accumulate some wealth, and they're reporting on the numbers, and the numbers are robust. They're seeing this as a business opportunity. Sarah stated that cryptocurrency investments of Brazil abroad could potentially triple the amount invested in American shares. However, Brazil is incapable of producing cryptocurrencies currently. In this sense, Sarah stressed it's a one-way flow due to cost of energy. Brazil does not actually produce crypto actives. It is just an importer. So instead of mining, for example, mining for Bitcoin or Ethereum, they are importing it only. Still interesting to note that Brazil, obviously cryptocurrency friendly, cryptocurrency forward. We did have this article from last year, Ripple and the Central Bank of Brazil holding that private meeting. And on the world stage, guys, I wanted to mention this from Wrath of Kahneman here on Twitter. This was back from March, but I thought this was interesting, and I do think it does speak volumes as well. And Ratha Kahneman, a very astute individual here, is pointing something out that I think we should be paying attention to. This March report is from the World Trade Organization, okay? This is for global trade. ICC titled Accelerating Trade Digitization to Support MSME Financing. They mention Ripple as an example of using digital assets to avoid the correspondent banking system. Now, what he says here, it's got to mean this, right? That they're going to be using XRP and not just using the messaging platform. Let me read it again. An example of using digital assets to avoid the correspondent banking system, which would be the SWIFT system. So if they were just using the messaging platform, that would be akin to the SWIFT system, but using digital assets, that is something completely different. So this is the report here, guys. I will link it in the description of this video for you. It is a 58-page PDF if you guys are interested in that kind of thing. I just wanted to synopsize this, though. Anecdotal evidence also suggests that the use of cryptocurrencies and stablecoins, for example, cryptocurrencies that try to peg their market value to an external reference, such as the US dollar, or to the price of a commodity, such as gold, by traders from the developing world to settle international trade transactions is increasing, see Box 2. Indeed, even large global banks and consortia in the developed world, such as Finality International, are creating their own stablecoins. A recent interpretive letter issued by a U.S. federal banking regulator allowing U.S. financial institutions to use stablecoins for payment activities is likely to accelerate the move. Last but certainly not least, some projects have emerged that use digital assets to settle global payments. So digital assets, guys, to settle global payments, this is the key here, and bypass the traditional correspondent banking system, such as Ripple. So boom goes the dynamite from the World Trade Organization directly. Here is the report. Again, I will link it in the description of the video for you. And for those of you guys who may not know, they are the intergovernmental organization that regulates and facilitates international trade between nations. Governments use the organization to establish, revise, and enforce the rules that govern international trade. They've been around since 1995, headquartered in Geneva, Switzerland, guys. So the World Trade Organization, obviously, as late as, even just earlier this year, suggesting that XRP could possibly be used for transferring goods. Of course, we know XRP not just for cross-border payments, but to basically exchange the value of anything from person to person, country to country, business to business, boom, like that on the XRPL. If it's on their radar, it must mean that it's coming soon to an importer-exporter near you. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.